Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, always great to get you on the KE Report to get your thoughts on what you see in the general market, some of the trends that you're looking at. And then, of course, we usually circle around to the commodities and resource stocks that we're all invested in. But let's kick things off with just the general markets. They have been in a somewhat corrective mode. You sent over a chart that we will post underneath this editorial for those following along on our website. But just break down what you're seeing in the general markets and what you're doing in your portfolio.
Well, we have seen a top form in the broad market. I'm speaking about the S&P 500 here. And so we actually have a trend going down now. Now, how long will that last? I don't know. So what I'm doing is I'm becoming more conservative in our portfolios, locking in some gains, and the kind of new picks I'm adding are ones that I think are going to be more resilient. I'm not looking for a bear market. The ingredients that would lead to a bear market simply aren't there. But, I think what we're dealing with is market disappointment over the lack of Fed rate cuts. And that's one thing. And if you believe that the market runs on free money, or anticipation of free money, that can be a major thing. But otherwise, the economy is still growing. Unemployment is still near record lows, though things like people quitting jobs is really starting to taper off now, stuff like that. So there is some signs of worry, but not really enough. We're probably seeing good growth, and so while the economy isn't the market, there just aren't the things there that would really trigger a big sell-off in the market right now. But I do see more weakness ahead.
Yeah, Sean, you raise a good point. When you think about the markets and the economy, they don't always have to travel in tandem. We've seen plenty of divergences in the past. So when you think about the posture of people coming into the markets this year, it was uber bullish. People were expecting 7 or 6 rate cuts coming into this year, almost one every Fed meeting on the back of an economic contraction and potentially a recession. Instead, we've seen just the opposite. We've seen better than expected GDP. We've seen stronger than expected jobs numbers. We've seen better than expected unemployment, to your point, and even better than expected retail earnings from the companies. So at this point, a lot of people are having a hard time seeing why would the Fed want to cut at all? And there's some people that are actually calling for 0 rate cuts this year. So when you think about it in that context, what would the stimulus be for the Fed to actually cut when we seem to be in an economic Goldilocks zone?
Well, because the reason the Fed might want to cut sooner than later is if they fear that we are going to have weakness ahead, because the problem is the add-on effects. There could be add-on effects from the series of hikes we've had that just haven't manifested themselves in the economy and the market right now. That's their big fear, that something could be happening under the surface, and so they'd have to correct for that. But as you say, I don't see anything coming out that would make them change their minds. Now, I don't think that cuts are off the table this year. Many people have taken cuts off the table this year, and some are pricing in hikes. I think that's way ahead of things. And I think the Fed does want to cut at some point, just to be on the safe side, to say, look, we've taken this appropriate action, so we aren't going to choke out the economy and stuff like that. That's basically what they'll want to do. So I think we could still see 1 to 2 more cuts. I should say 1 to 2 cuts. We haven't had any yet. But, that's kind of what we're looking at. The market is more pessimistic than that. Now, on the bright side, if we do get a hint that the Fed could cut for some reason, and it doesn't have to be something here, it could be some global thing happening that they want to insulate the economy and the market against. So if, say, more missiles started to fly in the Middle East and things really got heated up there, we'd probably see rate cuts in that point, because they just want to make sure everybody has enough easy money to keep business trucking along, even if things get out of hand there. So I'm not sure what would cause them to cut, but I don't think cuts are off the table yet. And they always have that fear in the back of their minds that they might be holding rates too high for too long. I think that's a fear that they are working with. They just don't have anything to make them move yet.
Yeah, and they got a lot of criticism, and probably rightly so, for waiting too long to start their rate hikes. So now they don't want to have that same criticism on the other side about the rate cuts where they wait too long. Do you think that
Exactly.
in the interest rate environment we're in, that the national debt, we hear a lot about that in the gold community, for example, that eventually this debt compounding at a higher and higher interest rate is going to be problematic. Do you think that could be a factor?
That could be a factor, and it's something I think the Fed should be concerned with. On the other hand, they'd like to see action from the politicians in Washington to do something to maybe lower the annual deficit, because otherwise they're just, making the junkie comfortable and not actually helping him kick the habit. Now, that could be a combination of spending cuts, tax hikes, a bunch of things they could do. For example, one thing they could do is legalize cannabis nationally and put a federal tax on it. That would probably bring in a lot of money, and would be a step in the right direction. So I think the Fed would like to see the people in Washington, D.C., the politicians start acting responsibly. Good luck with that happening, but that's probably what they're waiting for. That said, I don't have any special insight into what Fed Chair Powell and the rest are thinking. So right now they're in a wait and see mode, and we'll have to see if anything comes along to kind of push them out of that.
Well, Sean, you brought up a good point. They could do something more on the austerity side of things and reduce spending. Not as likely, and that didn't go over so hot in Europe when it was tried there, but they could tax other areas of the economy. And you brought up the cannabis situation. Biden administration just announced this last week that they were considering making it legal on a federal level, and that would change the game as far as taxation on a major commodity that's already in a number of states, both in a medicinal sense and in a recreational sense. I know that you also had a publication, The Marijuana Millionaires, that you were doing for a while, and you follow the space. Do you think that could be a boon for the cannabis sector if this goes on a federal level across the whole country?
Well, I have one cannabis stock in my personal portfolio, and I know that is a big boon for it already. There's anticipation coming in of that. And the one I have would be Green Thumb Industries. The reason I have that is because they make money and they keep making more money. I can imagine that if they get to legalize cannabis, which means they can start get the tax breaks and like stuff like that that an ordinary business can get, that's going to improve their financial situation even more. Some marijuana companies will never make money. MedMen, for example, just filed for bankruptcy, I believe. I always hated their business model, which is basically finding people to pay too much for marijuana. And some just are never going to work out. But if you can find companies that are either making money or on the edge of making money, if it is legalized and if they can start to get the tax breaks that an ordinary business does, that could be a real game changer for them.
Yeah, we'll keep following along with that because there's also a lot of other related companies that were in the beverage space, the snack space, and the vaping space that would also play into that whole theme. So there could be a lot of action in that sector. Another sector that got a lot of news from the Biden administration recently was the block of Russian uranium imports. And that is a big deal because Russia is a major player. What do you think of that news for the uranium sector?
That was incredible news. And in case your listeners don't know, the U.S. Senate on April 30th passed by unanimous consent. And how often do you hear those words connected to the U.S. Senate? But unanimous consent, a bill to ban imports of low enriched uranium produced in Russia. Now, that goes to the president's desk. He says he's going to sign it. I think the only person unhappy about this in Washington would be Ted Cruz because he always fought this. But you know what? He voted for it too. So good. There you go. So this will boost the U.S. miners, Canadian miners. There's a lot of powerful stuff here for these companies. Now, I have a list of companies that are bringing mines online this year, next year, and the year after. And those are the ones I'll be looking at to start adding more of them to our portfolios because there's some really good potential. We had to do this at some point anyway. The Russians are bad actors. We can't depend on them for something as vital as uranium. We just can't. So we have plenty of it here. We just have to do the things we need to do to boost uranium mining in North America and also places like Australia, places that are friendly. And so I expect to see more of that. And I'm very bullish on the uranium industry as a result.
Well, just to that point, I just got back, Sean, from a energy transition conference in Washington, D.C. to spend the early part of this week there, and the Department of Energy and the Department of Defense were there, and they weren't just talking to the critical minerals companies with your lithium, nickel, and copper. They were also talking to the uranium companies, and I actually sat down with Scott Melby, who is the boss of UEC, but he also runs Uranium Royalty Corp, but he
Yep.
also sits on a board that meets with the government and talks about production in the U.S. And we were rattling off a couple different companies. Doncore's in production, going to be ramping up. UEC is. Peninsula Energy, I met with there. They're going to be ramping up production at the end of this year and into next year. Your Energy Fuels. There's 5 or 6 U.S. players. And I think that that's an interesting place for people to be, to your point. What about the other side of it, though, the exploration side of the business? Is that just too high risk for you, or are you looking at uranium explorers as well?
I'm not really looking at uranium explorers. Now, that might be particular to me. I'm not saying you can't make good money in companies that are pure explorers. You can. It's just much more high risk. It's just from my point of view, those companies that are either uranium producers or going to soon be uranium producers are priced so cheap. Why wouldn't I buy them? Why am I going to invest money in an explorer? And sure, you have the knock it out of the ballpark potential, but also they can just keep printing shares until your shares are worthless, right? So right now, that small group of companies that is either in production or about to be in production is so cheap. I'm just focusing on actually buying them.
Sounds good. It makes sense as that approach because you are taking on a lot more risk with a company that you don't know if they've got uranium in the ground yet, whether it's in Canada, in the Athabasca Basin, or in the U.S. But if you go with somebody that you know's got pounds in the ground, pretty sure bet they're going to get a valuation higher as the sector continues to get more attention. What about the other critical minerals while we're thinking about that? Anything on your radar for things like copper or lithium or nickel, anything else in that sector?
I have a confession to make here. We had a nice copper stock in the resource trader portfolio, and it was doing okay, but I thought it had come up to a peak, and so I sold it. And that was right before copper blasted off. And I've been kicking myself ever since. So maybe I'm not the person you want to ask about copper. You know, I mean, damn, why did I sell that in March? Now it went down for a little bit and then it just took off again. It's like, gosh darn it. That's the dumbest move I've ever made. Now, not the dumbest move I've ever made. I've had enough egg on my face to open up a breakfast buffet. But I will say one thing that I am watching is the price of palladium has dropped below platinum. And that is interesting. I'm trying to figure out what's going on there. Now, they say there'll be less demand for palladium, but I mean, if you're as old as I am, you remember when platinum cost a lot more than palladium. But then things inverted because they just started using palladium more and more in like industry and stuff. And so prices went up. Now the price is going down for that, whereas platinum it's in a range, but it's starting to look bullish again. So I'm looking at that now, trying to figure that out. We'll just have to see how things go, but definitely be looking at the metal space. Materials as a group are actually looking good. If we are in inflationary times, and we seem to be, materials generally do well in inflationary times, whether you're talking about metals or oil or you name it. They generally do well. Of course, we've all seen the price of cocoa go way up and then come crashing back down within the last month. So these things can be volatile. Remember that. But I definitely think that you should keep materials as a group on your radar in these times, because if we have more inflation, materials generally will do better.
I think that's a great point, and I think it's interesting what we've seen as far as oil, even though it's pulled back a little bit recently, remaining relatively strong despite such high production out of the US and Canada. You've seen Dr. Copper break not just $4, but it broke almost up to 460 and some change just last week, and now it's back down to 450. But a lot of people call it Dr. Copper because of how they see that tying into the health of the economy. As far as the cocoa going to the moon and then coming back down into Earth again, there's a lot of other people that are thinking that the soft commodities, some of the grains and some of the other food commodities, may start having a better time. And we've even seen a lot of other base metals move higher. Does this mean there is finally some focus from generalists on the commodity sector?
Well, that might be too much to hope for. I mean, I like to think that. I like to think that every now and then they'll wake up to the reality of, hard assets. They only make so many of them, so they should have a higher bid. From your lips to God's ear, let's hope that happens. Let's hope that happens. I would be glad to ride that rally if it happens. As it is, I am just ready for it. And let me leave you with this. Small caps have underperformed so far this year, right? I mean, they had a great fourth quarter, and then the larger caps really started outperforming in the beginning of this year, and it's just been kind of that way since. One area that seems underrepresented to me is small cap energy, because those oil and gas companies are turning into cash flow machines right now. And Wall Street knows the big ones, generally knows what the big ones will do, but the small caps, the small cap energy stocks can really surprise them. And so if I was looking to combine those two things, looking for a rebound in small caps, and personally, I think we will see one of those. I'm just not sure when. And at the same time, trying to get stocks that are leveraged to higher oil and gas prices, well, small cap energy is a place where I might look. There might be some real hidden gems in there.
Okay, duly noted on the small cap energy, some of the smaller oil and gas stocks. As far as the small caps in general, do you think that's a function, the general equities, something like the Russell 2000 not doing well, is because the higher interest rate environment maybe makes that more challenging on those small cap stocks?
Absolutely. That, and also because the larger companies have more global exposure, so they just rake in money all around the world, and there's been inflation. They've raised their prices even when they didn't have to. You know, that's the thing we can talk about sometime about what's built into inflation. Somewhere around a third of it is corporate profits. And so these big companies, they're just making more money all around the world now. But certainly interest rates is a problem for the smaller companies, has been for a while. But I have to tell you, the Fed really doesn't look like it wants to raise rates, even though many on Wall Street think that's the next move. They don't want to raise rates. They'll at least leave them where they are. And in the future, they could start to cut rates just because, they don't want to choke the market for too long. So again, that would make me more positive toward the small caps.
Well, just one final question as it relates to interest rates and commodities and what's happening in the markets and the strength of the economy. Want to just get your quick thoughts on precious metals. I mean, when you look at it, all in all, gold and silver have actually done pretty well. Even the precious metals equities had a little bit of a bump there from March into April. Things have cooled a little bit this month, but I've noticed that there's been relative strength in some of the precious metals equities versus even the metals, and they're still holding up pretty good. How are you looking at the precious metal sector?
Yeah, I mean, they really are holding up well. And yeah, they've felt the same pain everybody has since April, but not nearly as much. You know, they have their golden armor on, I guess is what you want to say, right? And so I like the gold equities here. I just sold one today, but that's because it's not performing as well as my other precious metals equity. So I'm going to take that money and going to put that into something else, something that has more vavoom, because this is an industry that could really take off this year, I think. And so that's what I'm really expecting.
All right, well, we'll wrap it up there, Sean, but I always appreciate you sharing what you're looking at in the general markets and the commodities and the resource stocks. And if people want to follow along with Sean's work, definitely click on the link below this interview. And one of his publications that he referenced was Resource Trader. He'll share with you which stocks he is getting into for more of that vavoom. And we hope that they're good ones, Sean. But definitely keep us posted on anything you see in the markets. We'll talk to you in a couple of weeks, and looking forward to our next conversation.
Okay, great. Thanks very much, Shad.